Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's closing grain comments. And I'm going to actually cover the outside markets too. Some interesting moves out there. So, this is the first or second time I've done these afternoon quotes. I hope you guys like them. I do an afternoon right around lunchtime and then these final closing comments. So, let's get right to it. Looks like the S&P 500 and Nasdaq making new all-time highs. 64.18 and the S&P futures and Nasdaq trading 23,424. Just incredible to see how that's come back since that April flush. The Dow Jones right up against 44,000, 45,000. We'll see how that pushes tomorrow. The Dow was down a little bit lower today, but all in all, it's been a very impressive recovery since the April sell-off, and that's also extended through. I think that's one reason you've had continued strength in the cattle market as well. So a good day for the stock indexes. It's incredible how we just keep grinding higher. Now let's get to the grains. Spot corn, 401 and three quarters. The positive thing is we're back above 401 on the board. The negative thing is in 11 days on August 12th, we're going to get a USDA report, and that may change. We're still near contract lows. December corn finished up 3.25 cents at 420 and three quarters. We had about a 5 cent trading range in corn. Again, the two numbers that really matter for December corn, 407 and a half, which is the contract low. So it's nice to see that we are not retesting that yet, although that is a danger here as we sit down here trying to carve out a bottom. The other number to watch has got to be 432 and three quarters. That was the gap that we had on the July 4th weekend. That July 8th, go back and look at that. So that's a big number. That's a big target. A lot of charting systems, a lot of automatic trading systems, the algorithms, the robots. I like to call them the robots. They are attracted to those gaps, and it's actually surprising that we haven't filled it up yet. But bottom line is with non-threatening temperatures and with reasonably good rains across the country, people are concerned about how big of a corn crop this could possibly be. So I'll talk about that right there. If you've got unpriced corn, and we haven't had a lot to work with so far in December 2025 corn. If you're with me, back in February when we were on those highs, we had a couple days there where we traded around 470. We traded as high as, again, I think 478 three quarters, 479 and a half. We used those to get the 20% sold. At the time when I made those sales, I was actually holding my nose because I was sure that as soon as we sold something there, we'd be trading at 525 and people would be not too happy that they sold corn right before it popped. Be that as it may, that's where we're sold if you're with us. And moving forward, I have made recommendations to defend 410 corn for the next 60 days. We spent less than 9.5 cents. Those options now are trading probably around 8.5, 8. Still a great way to sort of put yourself at ease. I mean, I don't know if we're going to take out the contract low, but if we do, I don't want people calling up saying, "What do I do now?" It is a substitute sale. It costs you about 3.5, 4 cents a month. That's not horrendous. And it will look really, really good if we finish harvest and we're down around 380 or 375. Now, me saying that that's a possibility is not me promising you're going to be there. I don't play that game. I do know that it is a risk. So, be that as it may, that's what I would say. Maybe you defend what you can defend, because I don't want to be sitting here in this is July 24th. I don't want to be sitting here in August, or excuse me, in October October 24th, and right after Halloween, going, wow, would it be nice to get in the time machine and go back and at least do something at 410. So that's why we would hedge that. It's everybody's decision what they do with those bushels. There are some strategies where you can defer the cost. I'm not going to get into that on this summary, but absolutely positively take a look at doing that. New crop soybeans finished the day up a penny and a half. Again, only about a 10 cent, 9 cent trading range, 10.28 and three quarters to 10.19. We did finish the day up a penny and a half at 10.24 and a quarter. What's the big number to watch there? Well, if you read my letter, you know it's 10.18. It is the halfway back range of the entire possible trading prices that you've had this year. We traded as high as 1069 and a half, excuse me, 1074 and a half. And back in December, we traded down to 960. So you take that spread from the highs to the low, 1018 is right in the middle. Why is that important? Well, everybody that's a bull and everybody that's a bear, they're equally right, equally wrong. Um, Actually, the low was December 2024 was 961. And then two times we hit 1074 and a half, first in February. And then again, we hit 1074 and a quarter back in June. Now, if you're with me, if you've been working with me, when we got that high there in June, we did use it to get to 30% sold. We have been 20% sold. We got the 30% sold of guaranteed bushels. And our average sale price is right around 1066, 1067. So that's the best we've been able to do. Moving forward, I would say this: you can protect 1010 soybeans again for 60 days. You could do shorter term, 30 days if you wanted to, but that's the time frame I would recommend. Trying to protect 1010. Why? Because nobody wants to be delivering beans if they're back down at 960 without having had a hedge on. So I wish I had better offers, better suggestions. We could have higher prices, but this is a year where we've been under a lot of pressure. A lot of farmers are, rightly so, not too happy with the way the marketing year has turned out. So we're trying to make lemon out of lemonades. The last thing I want guys to do is make bad cash sales. If we do make new lows, at least if you have the hedge, you don't feel the pressure to call the elevator up and say, all right, I've got to hold my nose and make a sale here, because then what's the basis going to be if everybody and his brothers making cash sales, if we're at new lows? So this is going to be like the NFL. Defense wins the Super Bowls. It's defense, defense, defense. That's what these put options are. Real quick with wheat, Chicago wheat finished up a penny, but it is definitely fighting for its very existence. If we happen to take out 532, we finished at 541. If we happen to take out 532, that opens the door to 525. So, 25 to 41, there's 15 cents worth of risk there. It's not the time to have 20 or 30 cent puts on that are very expensive. Keep a floor, but make it cheap. The only contract that I'm really concerned about the most is actually Minneapolis spring wheat. That made a new contract low today. It went down and hit 584 and a half. The previous contract low was back in the middle of May. We were at 586 and a half. So we made a new low by a penny and we settled lower. Now, a lot depends on what happens with probably, corn and beans more than anything else, if we can ever get a recovery. We have bounced off this level before. Back in May, we hit this level, and then, a month later, we were at 665. So we did get a chance there. Maybe we'll get another one. But the same idea remains the same. Use the put option to stop the bleeding. I'd rather see you buy a cheap put option than make a bad cash sale on the lows. Moving on to livestock. The first down day we've had in a long time. August live cattle finished down to $1.22. Finished at 225.80. A lot of people were wondering if we could go back and test the all-time highs for cattle for this contract, which was 229 and change. Tomorrow we have a cattle on feed after the close. So if you've got cattle, if you want some sort of a floor, it's time to get it done here. We're at all-time highs, so the puts are cheap. As we rally, puts get get less and less expensive. They get more and more attractive because people are not concerned about corrections. That's usually when we have a correction. So that's something to watch here. So we did have a little bit lower day. December fat cattle finished the day down $1.25 as well, 222.65. On to the feeder cattle. Feeder cattle finished down 262, settled at 328. We had traded as high as 331, but they kind of pounded on it coming right out of the door. They sold it early. The previous day, which is Wednesday, we did make a contract high of 332 and change. So there's your new high that we've got to see if it holds. I believe if 332 falls by the wayside, it opens the door to 331, and then probably 345, 350. Um, if you look at a chart of feeder cattle, it's just one of the most impressive bull markets we've had. Now I'm looking back here, November of 2023, we were at 210. November of 2024, we were 244. So here we are at 326. It's just been a one-way trip up. We've had a couple pullbacks, but it's really been a market that has rewarded, quite frankly, it's rewarded people that did absolutely no hedging. Um, but you never know when that correction is going to come. That is why we hedge. And moving on to lean hogs. Lean hogs is kind of back on the warpath. Um, Fundamentally, there's some tightness out there in the market. You continue to see packers step up and pay new highs, and we've had a nice recovery since 5 days ago. We had a correction down there to that 86-cent level in October. Lean hogs. Now we're back up to 92. It sure looks like we want to take a run back up at 96, 97. If we do get back up there to 96, 97, that's going to be another hedging opportunity. But all in all, pretty good action that we've continued to have in the entire protein complex. So that's what we're looking at. I'd say pretty impressive to see the stock market keep going higher. That's something that's also supportive for the livestock market. And for D's corn, it all comes down to, is 407 going to hold? And for new crop soybeans, I would say, is 10.10, $10 going to hold? So if I'm a producer and I've got nothing hedged, I'd want to look at protecting $4 at the very least and $10 at the very least in soybeans. That's not exactly what most producers want to be hearing here on July 24th, but it is what Mr. Market has given us. So in any event, I hope this information helps you. If you're looking for help with your marketing, if you're worried, if you don't understand options, if you need someone that has experience that can help you, make these crucial decisions, I can tap you on the shoulder and at least make the suggestions. That's the way I work. Look forward to hearing from you. You can call me 312-638-8868. And I'd love to talk to you. This is Chris Robinson. Have a great night, and we'll be back at it tomorrow. In the morning, I will send out my usual morning email, my morning letter. We'll have all the letters in it, levels in it, and also any overnight news that move the market. And thank you for listening. Have a great day, and take care.